Let's start with the elephant in the room, because you guys are nervous Nellies. Oh my God, everything is so scary. The crypto went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean the Bitcoin's going to 70,000? Calm the down.
A flash crash spooked the market as Bitcoin dropped down to the $90,000 range earlier this week, with altcoins following the same downtrend even harder. The market held its breath, as the general consensus amongst many analysts was that if Bitcoin didn't find a way to bounce from the $90,000 resistance level, then a retrace to $70,000 was in the cards. However, Bitcoin bounced back strong, as it's currently flirting with $100,000 once again. Amidst those who were not panicking after seeing all of the red across the charts was crypto enthusiast Raoul. In a recent episode on the Raoul Journeyman podcast, Raoul shared his insight on the markets, the next leg of the banana zone, AI, and his favorite wine regions. Spoiler alert, it's Burgundy. Raoul has been preaching that after the first leg of the banana zone, there is a retrace, typically in January, and this is all going exactly as he forecasted. Raoul suggests that the banana zone is still on and that the market is ready to take off. According to Raoul, morons will make money, all of your trading sins and stupid entry points will be forgiven, and bags are going to pump in these next few months. But that's if, and only if, you don't F this up. Let's listen to what Raoul has to say.
So, let me talk you through why you should stop your bleating. Firstly, in 2017, we had a new president of the United States that shocked everybody getting voted in, called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump, who is coming in a few days' time on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now, and oh my God, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me. What does it mean for Bitcoins? Okay. It all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern, which kind of says that global M2 should probably base around here. Again, don't expect perfection, but expect some repeat. Oh, the NASDAQ did something similar too. It would suggest the NASDAQ should be going up pretty sharply now. And lo and behold, today, the NASDAQ has a really strong day. Feels about right. Old Trumpy boy's about to come in. But it's about the dollar. The dollar's been strong. That's what's been driving global M2. And guess what? It was identical back then too.
Raoul just walked us through the deja vu of 2017 and why he's so bullish on what's coming during the second Trump presidency. Raoul is convinced that a weak dollar is on the horizon, as it benefits everyone globally, which is a catalyst for the green candles on the crypto charts. Raoul now discusses precisely why crypto will boom, specifically Bitcoin, and what we can expect in the coming months. Let's listen to what Raoul has to say.
Crypto. Here's Bitcoin, following the same pattern roughly. 2017 has been my base case for a while. Do not expect it to be identical, but, and do not expect it to be going to wherever the scale says, I'm not looking for $1 million Bitcoin. Sure, there's a probability, but it's like 5%. But directionally, we should get this right, and it should continue to rally into the end of the year, into 2025, and maybe into early 26. We'll have to wait and see. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here. And this is the typical post-correction halving. So what we have is the start of the banana zone, which we talked about from about September, and that was when Bitcoin hit 50,000. The banana zone t-shirt, buy the merch. There's a load of there's amazing Real Vision merch, and the banana zone is the coolest ones of all. And don't this up, because that's the other one. That's the important lesson you guys need to learn. So the first banana zone phase one, that was this period here as we come up from the sell-off from the halving. Then we have the correction from the banana zone phase one. Happens every time. Then what do we get? The banana singularity. That's the next bit, when everything just goes up. And it makes us all look like geniuses. Every coin we've ever bought goes up. Everything goes up. And we think we're gods, which we're obviously not. We're probably just morons trying to do our best. But luckily, crypto market, it trends up over time, so it kind of covers all sins. As long as you're not too far out the coin curve, you'll generally be fine over time, particularly if you don't this up and stick to the big ones. They generally do fine over time. So it can cover all of your sins, your terrible entry points, all your stupid mistakes. I think it'll be fine. So that's what I'm expecting next. We should be starting now. Let's talk about the dollar again. Dollar is a wrecking ball. A strong dollar lowers economic growth. The US Economic Surprises Index shows that it follows the dollar. The dollar has a 2-month lead. The dollar's strong. The economy slows down. So we're expecting to see the US economy slowing down over the next coming 2 months, and sharply so. And bond yields have been going up. This is inverse of bond yields. That also brings down economic growth. So rising yields, a rising dollar leads to falling growth, which leads to rate cuts coming back to be priced in, which is liquidity is coming. Another way of liquidity is rate cuts. Rate cuts are not the best measure of liquidity by any stretch, but it just tells you that we're going to go through a change in expectations. The data is going to come in more dovish. The Fed will have more room to move. The markets will feel better for it. And so slightly bad data, not terrible data, not recession data, just weaker than expected data gives the Fed cover. Remember, the Fed have to roll their debts. And if they roll their debts at too high rates, it compounds and the debt gets out of control. What they need to do is roll their debts at the lowest interest rates possible. So they've been shoving it on the short end of the curve so they can hope that they can get rates lower and then they can refinance the whole lot. That's been the game. It's the refinancing game, the everything code game that I first came up with in Global Macro Investor.
To watch the full interview, check out the link in the description. What do you think of Raoul's thoughts here? Where do you see Bitcoin heading for the next part of the banana zone? Leave a comment. If you found value in the content, hit the like button, as that greatly helps the channel find similar viewers like you. If you're new to the channel, hit the subscribe button to stay up to date on the latest commentary on the crypto markets. Thanks for watching, and we'll see you on the next one. SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Ifani and lock out SIM swap fraud and get the most elite mobile protection in the world. Ifani guarantees 100% protection from SIM swaps, backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Ifani to keep your communications and assets secured. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.